All right, good morning. So I talked about a year and a half ago about homeowners policy and endorsements. It's about to talk on auto, and then I just thought homeowners is just more important right now. So I'm going to do a little bit of a, if you were here a year and a half ago, I apologize. All right, or maybe you'll learn something better. So I took my homeowner policy, okay, and we will go over this. Homeowners is broken down into, it starts with coverage A, B, C, D. A is the amount of your house, and B, C, and D are percentages of A. Okay, so the house burns down, I have $626,000. Okay, if I have a shed, a barn, that's coverage B, that's 10%. If I have my contents, that's at 70%. This company allows me to take it down as low as 40, save some money. All right.
What's the difference between 70% of contents, 70% of the value of the house for contents, and 40% of the value of the house for contents?
40% is like
to me unless I have some kind of rocket number.
$250,000 for 40%.
No, I understand that.
Oh.
What's the difference in payment cost?
I'm going to answer you a little better on that. Well, actually, the difference might be $40. Okay. 95% of the companies do not give you the option to go below 70. That's it. That's their homeowners policy. Every company, I have 5 of them, and every company is 70%. All right, for contents. This one company does allow me to take those internal numbers down. Okay, so most are at 70, but yes, we could do 40. Now, if I felt I had more than $250,000, of course I can raise that percentage. The only thing I have a percentage that's worth over $250,000, of course, is my dog. We all know about Buddy. All right, but loss of use. All right, that is 30% generally. Most companies, that's all it is. This company, I can go from 30 to 20. That saves about $100. All right. Loss of use is when that house burns down, you need to go live elsewhere. Okay. Maybe for a year. You have to have all your costs paid. Your food, they'll even go with clothing, your hotel. So that can really, some claims can go a very long time, especially if you have a public adjuster involved. All right. That could just really take the time, and you better have enough coverage for it. All right, but that is 30%. So in this case, 125,000. That's A, B, C, D. E and F is your liability. All right, how much are you going to pay? Someone slips on your sidewalk. You always want the max they offer. I have $500,000. That's the maximum. I also have, this is an ISO company, and most are ISO. But I do have an MSO company, Farmers. They go up to $1 million. The difference in premium, it just kills me to see anybody with 100 or 300,000, because the difference in premium to get to $500,000, you're talking $15. It's just a no-brainer. Okay, so always max out on your liability. Liability is your most important part of your policy. All right.